EPL Limited is an Indian company. Its current market cap, as we can see, is 7,236 crore rupees approx. Price of one share around 226. Stock PE ratio of 18.2. A dividend yield of 1.11 percentage. That means its dividend it pays in a year is around 1.1% of its current market cap. Its return on equity is around 16.3%, not bad. And return on capital employed, also known as ROCE, is around 17.5%. So what we're going to do is first we're going to check its revenue, its profits over the last 10 years, 11 years to get an overview. You'll get its return on equity over the previous 10 years, again to get a nice overview. Then check out its return on capital employed, all available on the website screener.com, of course. Then we're going to check out its market position. Which market does it operate in? And what is its position? Is it number one, number two? Is it a big player, small player? And finally, we will take a look at its future outlook, what it's looking for, its future targets, initiatives, and all that. So let's start. So first thing is, of course, financials across the 10 years, last 10 years. So here we have the P&L, profit and loss. You can see 2014, things go up from 2014, and you can see the number of criterias, parameters we have. We have sales, we have sales growth, we have expenses, we have operating profit, we have operating profit margin, we have profit before tax, and finally we have profit after tax. And at the bottom, we also have dividend payout percentage, dividend payout ratio. What percentage of, let's say, retained earnings, earnings left in a company, is it paying out as a dividend? Higher this percentage, the better. So in 2014, 2,215, 25 crore rupees is total revenue, and all of these numbers are in crores. So we move forward, and we can see the sales growth 16% sales growth in 2014, 8% decline in 2016, but the OPM increased, the operating margin actually increased. Sales we see 2,707 crores in 2019. COVID took a bit of a hit. In 2022, 3,433 crores. Then we move to 2023, 3,600. We move to 2024, 3,900. We move to March 2025, 4,213 crores total revenue. Operating profit of 836 crores. And at the bottom, we have profit after tax of 364 crores. These were the absolute numbers. In order to see them in percentages, in actual growth percentages, now the 10 years annualized sales growth has only been 6%, not the highest. And it has risen a bit, 7% last 3 years, 9% last 5 years, and 7% the last 12 months. And we can see here 16% sales growth, minus 8%, 5%, 11%. Okay, 2% COVID, that's all right. 11%, two times double digit growths back to back, 2021, 2022, and a bit of a slowdown, 7.5%, 7.6%. So revenue wise, it is not a fast grower. That's obvious. That's what we can see. Profit growth is better. 10% annualized over the past 10 years. Pretty good. Last 3 years, 19%. Last 12 months, 57%. Pretty nice. Could be a one off. We will look into that maybe. Return on equity, a very important metric. Pretty constant, we can say. Nothing big, nothing small. It's not rising a lot, not falling a lot. 14% consistent over the past 10 years. A little bit of a rise to 16%. So revenue wise, we saw not a fast grower. Um, Profit wise, a bit faster. So it shows it has operating leverage. Basically, its profits tend to grow way faster than revenue, and that's known as operating profit. That's a term one can always check out. Very important term. Stock price performance, okay, last 1 year hasn't been that exciting. And return on equity, stable 14%. Now, one more thing we can look at that we discussed is the return on capital employed. Okay, so at the bottom we have return capital employed, and of course you have the years. A return on capital employed measures the capital employed. What does that mean? It means, from what I understand, total assets minus short-term liabilities. If I'm correct, I may be wrong actually there. But return on capital employed, very important profitability metric. 14% in 2014. We moved 2016, 18%, 17%, 17%, 16%, and 13%, 12%, okay, in 2023. Big, big, big drop down, 15%, and finally 17%. So, overall speaking, the last 10 years, it has been 17%. Very consistent. So, very consistent return on capital employed, very consistent return on equity. So, now we checked out the revenue, we checked out the profitability metrics, we checked out the efficiency metrics, that is return equity and return capital employed. And we finally come to the position. What market is it in and what position does it have in that market? So, this company calls itself the world's largest specialty packaging. So, the global market, it says it's 42 billion tubes. Now, what kind of tubes are we talking about? Tubes as in toothpaste tubes, as in the tubes of creams. We have creams like so that creams come in a tube. You can pour the tube out. You can pour the cream out of the tube. So tubes like that, that kind of packaging. The toothpaste, the paste is in a kind of a packet, the toothpaste packet. So those kind of tubes, specialty packaging refers to that. So first you have 42 billion tubes, global market, and EPL controls 20%, meaning it manufactures around 8.4. It says 8 billion tubes. They make 8 billion tubes. And here we have the segmentation of this $42 billion figure. Now, 22 billion, we have beauty, cosmetics, and pharma, 22 billion tubes. Now, this is important because EPL looks at this market, this 22 billion tubes of beauty, cosmetics, and pharma, the future, the thing that will actually drive their growth is this. And this actually now contributes to more than 50% of the revenue. This segment, beauty, cosmetics, and pharma. And a current share of EPL in this is only 10%. So a lot of market is still there to capture. Then we have oral care. This is the more traditional line of business. 17 billion tubes, of which EPL controls a 35% market share. Very big. And last, we have food, home, and industrial tubes or packaging, specialty packaging, uh, actually tubes, 3 billion tubes for like food, home, and industrial appliances, you can say. And 8% market share, maybe not as big of a focus. So, oral care is the traditional market that they have, and beauty, cosmetics, and pharma, which they call as BNC, is the future they're looking at. Now, this was the current position and the market they're operating in. So, it's a specialty packaging market. Then we have the global footprint. Okay, the global footprint. So, again, 8 billion tubes supplied annually. They have the state of the art manufacturing facilities globally, 21. Categories served, you already saw this oral, beauty and cosmetics, pharma, home, industrial. All right. So, but the revenue comes from pretty diversified sources overall speaking. Europe contributes to 22% of annualized revenue. So we saw revenue was around 4,200 crores. So around 22% of the revenue comes from Europe, 24% comes from the Americas, 22% comes from EAP. EAP is the East Asian Pacific region. So the East Asian region, but in the Pacific areas, maybe like the Philippines, but my geography is not strong. But so East Asian Pacific and AMESA region. This is the Africa, Middle East, and South Asia. Africa, Middle East, and South Asia contributing the biggest portion, that is 32% of the revenue. So overall, a globally diversified company when talking about revenue. So this was the global footprint. We looked at the position, and now let's look at the future, looking ahead. What are its aspirations, its targets? So looking ahead, scale, profitability, and capital efficiency. So one is double-digit revenue growth. Now we saw that the revenue growth was like 6% over the last 10 years. Looking deeper, of course, COVID, one small year, and recently speaking, like 7.9%, 7.6% revenue growth. They hit 11% revenue growth, I think, back to back, like 2022, 2023. So it's not that small of a grower. It grows. EPL seems to genuinely have some growth in it, and it's aspiring to double-digit revenue growth. And how? One is aggressive beauty and cosmetics, expanding more into beauty and cosmetics. Scaling up in Brazil, so geographical expansion. So Brazil, they're scaling up, which means they're already in Brazil and they're scaling up operations in Brazil. They're expanding in Thailand, so other geography, and they're looking at mergers and acquisitions. Then the second goal is return on capital employed. They're trying to improve it from 18% to 25% by fiscal year 2029. So around 3 years. How will they do it? Consistent margin improvement. Okay. They're looking to improve the operating margins. Robust capital deployment model. All right. And operational efficiencies in net working capital and asset utilization. So improving margins and utilizing their assets better, deploying all their funds, the capital better, operational efficiencies in net working capital. You can check this out, net working capital, working capital. It's a very important thing. And they're actually achieving all these aims. Return capital employed in the latest quarter actually reached 18.9%. Not 29%, but 18.9%, a significant improvement, let's say, or a nice improvement over the past few years. In this looking ahead section, looking in the future, we saw two things: double digit growth and return capital employed. They want to reach 25%. So, looking more into this, we have a few more pages, few more data, few more pages here. One is this. Okay. Again, as said earlier, BNC or beauty and cosmetics, they look at it as their huge growth opportunity. So their volumes are 1.58 billion of the 14 billion total tubes market, that is the beauty and cosmetics. They are okay. They're stepping up their extruded tubes play. So expansions they are planning in Europe and India, and they're making more capital investments in China. And investments in back end and front end capability. They're integrating the supply chain. So the whole supply chain, getting raw materials, processing, making the final product, distributing, they're integrating the front end and the back end. So here, they're skilling upgrades through focused trainings. They're making back end investments in smaller run sizes, leading to shorter lead time and more tooling capability. So basically, integration of supply chain, very important. And of course, innovations, new products and all that. Let's not go into more into the details of that. Then, geographical expansions. So one is Brazil, uh, expansion within a year of operations, three new MNCs already added. NeoSeam, a new product, new innovation product, seems to be gaining popularity. That's good. It seems they're introducing a new product and it's actually working, which is very nice. And EBITDA margin accretive. It's just adding more, or it's increasing, margin is increasing. Then we have Thailand. It's an exciting market, 1.5 billion tubes market. That's the size. It's a gateway to Vietnam, Indonesia, and the Southeast Asia exports. And it's going to be operational in H2, which is the second half fiscal year 2026. Around, I believe that should be July, September, October. That's October to December time. It should be operational by this, yeah, at October time, September time of like 2025. It should start. And they've already achieved 100 million tube pipeline. So pipeline refers to a process of how a sale is achieved. So from getting a customer or potential customers or trying to find potential customers, actually selling the product or getting an order from the customer, that's a pipeline, the process in which the entire sales process, you can say. So 100 million tubes pipeline has already been developed. These can be very strong 100 million tubes orders or like potential, very strong potential sales, basically. Moving on, we have last thing, path to, huh, okay, we already did this. Yeah, return capital employed. It's the same thing, but it is, okay, robust capital deployment model. They expanded a bit. Capital expenditure is going to be equal to depreciation to fund double-digit revenue growth. Okay, so capex is going to be equal to depreciation. Hmm. Meaning, if depreciation was way more than capex, that may indicate a bit of underinvestment. But they're going to be having their capex equal to depreciation. So, what if the depreciation is how much the assets are declining in value? They're going to invest that much in assets so they can fund double-digit revenue growth. And finally, we have, I believe, an overview of the company, a last final overview of the company. Of course, you already saw this diversified revenue base, global company, billions of tubes manufactured, 21 their own facilities, manufacturing facilities, 21 of their own, and a big player. And finally, let's look at some of their customers. Here you can see EPL caters to marquee customers, $1 trillion categories. You have some global names like, is that Unilever? Okay, we got Unilever, we got Cipla, we got Dr. Reddy, Zydus, Colgate. I believe that's Godrej. We got Dabur, Marico, L'Oreal, Patanjali. Nice. Himalaya, Imami, who's Leaford. Okay, Novartis. We got Novartis. Okay. And in tube revenue split for fiscal year 2026, the first quarter, oral care 46%, but beauty and cosmetics 41%, pharma 9%, and here we have the personal care and beyond 57%. So portion of, okay, beauty and cosmetics plus pharma plus a bit maybe of the other of personal care and beyond, the major revenue driver. But still oral care is still big, 46%. Beauty cosmetics is the future and pharma is again part of the future. So that's it. Bye.